Hello everyone, welcome to my channel. My name is Prajakta Bapat. Today we'll be discussing format of vertical profit and loss account which is used in management accounting. In the previous video we have discussed about vertical balance sheet. Now, while calculating profit or loss, it is normal rule that we deduct expenses from income and then we calculate profit or loss, meaning income minus expenses is your profit or loss. Same logic will be applied over here, but when we calculated vertical, when we prepare vertical format of profit and loss account, we don't prepare like trading account and profit and loss separately. Okay, we just combine it and make it into one statement. So it is also called as income statement or revenue statement because we write it in a one statement itself. So it will include all items which we used to write earlier in horizontal format in trading or profit and loss. That all items will be included here in one statement itself. So let us start. As I said, first we will be writing always income minus expenses, you will get profit. So first point is gross sales and services. So it is categorized into two, cash and credit sales. So what will be my main source of money, or in business what will be my source of income? That is my sales, right? Cash and credit sales. So that is my income. So it is recorded as gross sales and services. Cash and credit sale we will be writing, will be adding up, less returns and allowances. So if there are any return, sales return, or if there are any allowances which I have allowed, meaning discount sort of things, so it will be deducted and you will get net sales. Now this is the one which will be considered as a final income. From this all expenses will be deducted. Now moving to the expenses. Expenses has a lot of categories. Let us discuss it. So less. Okay, now this is fourth point. Now as I said that we are writing all items from trading as well as profit and loss. So there are expenses since production of goods, when manufacturing starts from there till selling point. All expenses I have to write under one statement itself. So we will go chronologically. First I will write expenses which are related to your manufacturing activity. That's why it is called as less cost of goods sold. That is your COGS. Okay, so what things are included in COGS? So basically whatever you used to write in your trading account earlier, that we will be writing in COGS. Okay, and the items which are related to production of goods, that will be recorded over here. That expenses will be recorded over here. So first is raw material consumed. Whenever it comes to production of goods, first I require raw material. First and foremost important thing is raw material. So I have to write raw material consumed. So I have to see that how much raw material I have used or consumed in this particular time period, right? So I am taking opening stock of raw material first, meaning which was closing stock for the last year, which was unused in the last year, because before purchasing new stock I'll be using the old stock, of course. So that opening stock I'll be taking first, okay, which will be utilizing now. Then add purchase of raw material, whatever new purchases you have made, that will be added. Add freight, octroi duty, if you have paid any expenses which are related to purchase, like freight you have paid, carriage you have paid, so that will be recorded. Minus closing stock of material, because this closing stock is unused stock of this year, okay, which will not be recorded, which will not be consumed this year. This is unused. This becomes closing for this year. Next year it will become opening. Next year I'll be using it. So I'm deducting this. This is the only item which is deducted, right? So you will get raw material consumed. This was one part of your cost of goods sold. Okay, then we will write other expenses which are related to again manufacturing activity. So if you see here, we have written direct expenses, we have written depreciation of plant and machinery. Why only plant and machinery? Because only plant and machinery are used for manufacturing activity. If you have any depreciation on furniture or computer, it will not come under cost of goods sold. Okay, assets which are used in factory, only that are recorded in only for that depreciation is recorded here. Then if you have any stock of WIP, so add opening stock of WIP less closing stock of WIP, meaning if any work is incomplete, that you have to complete first. That's why. Less sale of scrap, Now why less sale of scrap? Because I'm writing all the expenses over here, and sale of scrap is your income. So that has to be deducted from here. So less sale of scrap. If you see here, it is in bracket. That means it has to be deducted. Then if you have any opening stock of finished goods, meaning unsold goods, so that also will be recorded over here. But there are very less chances that WIP, opening and closing stock of WIP in finished goods, is given in the question. Okay. If it is given, it has to be recorded under COGS itself, that is cost of goods sold. So we have got cost of goods sold. So since raw material we have written all expenses and everything, meaning manufacturing activity we have completed. So these expenses will be deducted from your sales, that is net sales. So net sales minus COGS, you will get gross profit. So you can say basically you have completed your trading account and output is gross profit. Okay, but just in a vertical way. Okay, and the profit and loss account also will be in continuation with this. So 3 minus 4, that is net sales minus COGS. I have got gross profit, which is my fifth point. Okay, now sixth point is now onwards we'll be deducting all expenses which we used to write in profit and loss account. Okay, in horizontal format, because trading is done now. So first I will deduct operating expenses. Now if you see in this vertical format, we have classified our expenses in two, operating and non-operating. Now what is operating? Operating meaning operations, okay, meaning day-to-day activities. So expenses which are related to day-to-day activities are called as operating expenses, and expenses which we do not occur every time, which are occurred sometime or somewhere in between, that are called as non-operating expenses. Okay, so from gross profit, first I will deduct operating expenses. Now operating meaning, as I said, day-to-day expenses. Okay, so that are categorized into three. Actually I have written here in with example also in detail, that's why it is big format. It is not that big actually. So there are three headings under operating. We have administration, we have selling and distribution, and we have finance charges. Okay, so administration meaning you don't have to by heart this format actually. Okay, automatically you will remember it. Administration meaning all office related expenses. Okay, so basically salary paid to the employees, rent paid, taxes paid, then legal charges paid, electricity paid, this all will be here. So see the example they have given: salary, rent, audit fees, taxes, laptop repairs, printing and stationery. These all things are your administration expenses. Then selling and distribution meaning expenses which are incurred for selling of product, meaning whatever product you have made. For selling and distribution, whatever expenses are there, that you will write. So for example, if you have appointed any salesman, so you will give commission, you will give salary, then you will make advertisement, marketing activities, right? That all will be considered as a selling and distribution. So salesman salary, rent of shop or showroom, depreciation on delivery van, advertisement expenses, traveling expenses, these all things will be written under selling and distribution. Now about bad dates, there are actually some conflicts in this. Few people write bad dates in finance charges, few people write in selling and distribution. So basically it is more apt in selling and distribution because it is related to selling and distribution. Whenever you sell out goods, you receive money. If you don't receive, if you postpone it, it is called as debtors, and if debtors become bad, they are called as bad debts. So according to me, it comes under selling and distribution, but few people write it under finance charges, but that's okay. Then under finance charges, we write all expenses which are related to finance. So for example, cash discount, bank charges, abnormal bad dates. If there is any abnormal bad dates, that will be written under here. So we completed finance charges also. So we have got operating expense, total of administration, selling and finance. So this is total of operating expenses, A plus B plus C. Now these are ultimately expenses, though you have added all the together because it were categories, but now it is one expense, one heading, operating expense, which has to be deducted from the gross profit. Okay, so you have deducted it. Now you have got operating profit before interest. Okay, now why it is considered as operating? Because you have deducted operating expense. That's why whatever profit you have got, it is operating profit. Okay, before interest. You haven't received, you haven't deducted any interest yet, so it is before interest. Now less interest paid. As interest was not recorded anywhere, it has a separate heading called as interest paid. Obviously, remember, it is not interest received, interest paid. So it is expense basically we are writing. So whenever I have paid any interest, it will be recorded under this head, meaning interest on loan, interest on debentures, interest on public deposits. These all interest will be recorded over here. So once you make the total, it will be deducted and you will get net profit after interest. Okay, after interest, because now I have deducted interest. Coming to the next is non-operating income and non-operating expenses. Now, when I discussed operating with you, I was telling you that there is another category called as non-operating, meaning which are not operational, which are not used or which are not incurred on a daily basis. That category is called as non-operating. So we have non-operating expenses as well as non-operating income also, right? There can be other activities from where you receive income, but which are not daily activities. Okay, so if you have income, obviously it will be added because this is profit, no? So income will be added to it and expenses will be deducted from this. So non-operating income is added. What all non-operating income you might have? Dividend on shares, profit on sale of assets, royalty or share transfer fee, interest on debentures. So these are actually all the expenses, sorry, income which we don't do on a regular basis. For example, selling of an asset, we don't do it always and you receive profit. वो हमेशा नहीं होता, it's not our business. So it is non-operating income. Non-operating expenses which are not incurred on a daily basis. So for example, loss on sale of fixed asset or fine or penalty paid or preliminary expenses written off, these are not done always. So it is non-operating expenses. So now here net profit is your base after interest. I'm adding non-operating income, I'm deducting non-operating expenses, so you will get net profit before tax. Okay, now why before tax? Because tax is yet to be deducted. Less income tax, it will be given to you in the question, so you will get net profit after tax. Then profit and loss brought forward. So if you have any profit and loss brought forward from the previous year, because this 14th point is for current year profit. If you have any profit or loss brought forward from the previous year, it will be added over here so that you will get total profit, right? Less appropriations. Now what are appropriations? Appropriations is basically, it literally means distribution. Okay, so whatever profit you have earned, we are distributing it in various sources. So basically, whenever I earn profit, my first and foremost important part is dividend paid, right? So proposed dividend will be there. Plus there are few reserves where company transfer certain amount to reserves, right? So transfer to reserve, and then whatever is remaining, it will be considered as a retained earning for the company, which company keeps for their growth and expansion. So total profit minus appropriations, you will get retained earning. Okay, finished with the statement of profit and loss. We'll just go through quickly whatever heads we have learned. Okay, only heads. So first you wrote sales. Okay, from that you deducted COGS. So you got gross profit. From gross profit we deducted operating expenses. There were 3 operating expenses. Then you got operating profit before interest. Then I deducted interest. Then you got net profit after interest. Then I adjusted non-operating income, non-operating expenses, both. So you got profit before tax. Tax is deducted, then you got profit after tax. And then appropriations, we got retained earnings. That's it. Thank you.